If you are looking at this chart, you may be feeling somewhat down today, seeing that silver's down almost 2.5%, gold is down about 1.18%. But in today's episode, guys, I ran another spreadsheet and I want to give you some fresh data that I calculated this morning regarding inflation. And guys, this is going to be something that I actually have never seen written out before. That's actually why I went down the path of running these numbers myself. And by the end of this episode, I will show you why inflation will be stickier and will last longer than many people are anticipating or may have anticipated. Now, before we get into that and its implications for silver, hit that subscribe button down below if you are new to this channel. If you haven't been back in a while and you find that something's kind of janky with your subscription and notifications, hit that notification bell as well. That rhymed. Let's get into it. So let's scroll down here and see what exactly is happening today. So we are going to start off with the movements for today and just general technicals for the outlook of the near term. So here we have silver, and as many of you guys know, regarding the inputs and what impacts the price of silver, many of you guys know that I've made a model and that I've inputted Bitcoin and gold, CPI, real yield, so on and so forth as inputs that impact the price of silver. Now, today, you guys have seen that gold is down about 1%, but also in addition to gold, Bitcoin is down about 1.79%. So these two are adding pressure onto silver right now, but still it's around 23.97. Not too bad, especially after this pretty crazy run. So again, if you're taking a look at the MACD, expect some moderation, but again, this is pretty strong given where we've come from and given the last strong run that we had. So I'm not feeling too bearish. I'm just thinking, okay, we might be taking a little bit of a breather right now. But what exactly prompted this to happen? Well, if we take a look at one of the major competitors against silver, which is also added into my model, you have the dollar, and the dollar's been rose today to about 93.93 after falling. Now, you may wonder, well, what caused it to fall initially? Well, if you take a look at the pound to US dollar, the pound rose pretty strong, like really, really strong and aggressively, and hit a high around 11:30 a.m. British time, which was around 7:30 a.m. Eastern Standard Time. Now, when it hit that high, the US dollar actually around 7:30, around the same time, hit a low. So there's a relationship here, a negative relationship. So had to do some digging with this. And it looks like the money market suggests a 62% chance that the MPC will hike rates by 25 bips at the upcoming Bank of England monetary policy meeting next week. Apart from this, the sterling further benefited from some cross-driven strength stemming from a fresh leg down in the euro to pound pair, which tumbled to the lowest level since February 2020 of Tuesday. So it had some room, and also it looks like there's some strength and added benefit to the outlook that there's going to be a rate hike. So that will give the strength. That will give some strength, obviously, of the pound over the US dollar in the near term. So one of the reasons why it ran up, but then it kind of sold off right after. So that's kind of the movements for today. Now, you may be wondering, okay, TJ, what exactly were you talking about before regarding inflation and why prices for silver will run hotter? Well, it has to do with housing. Yes, housing, that one metric that we often talk about, that everyone's been talking about recently, regarding rent. Now, I have been one of the main people have been banging the drum about OER not being considered by many analysts as being a considerable input for CPI and inflation. But what exactly are the hard numbers? We all know there's a lag between OER and home prices by now, but what exactly is that number? How much of a lag is it? How many months? Well, I'm going to show you that real soon. But first, we just got the Case-Shiller Home Price Index, which is what impacts OER. And it looks like things have started to cool off a little bit with the Case-Shiller Home Price Index. There's a little bit of deceleration, but it hasn't plummeted. So let's see exactly what's going on here. And I'll start here. There are signs that price growth could be cooling off in the otherwise red-hot housing market. Prices rose 19.8% year over year in August, which was the same as the previous month, according to S&P CoreLogic Case-Shiller indices. That is the first time the annual gain hasn't increased since early 2020. The 10-city composite annual increase was 18.6%, down from 19.2%. Actually, I'm going to skip that paragraph. And here's a quote. We have previously suggested that the strength in the U.S. housing market is being driven in part by a reaction to the issue as potential buyers move from urban apartments to suburban homes. August data also suggests that the growth in housing prices, while still very young, may be beginning to decelerate. Now, if we truly did hit a peak with home prices, then we might start to assume, okay, well, we might be hitting a peak in rental prices somewhere down the line after rental prices spike. But when exactly will that happen? Well, guys, I did the math for you, so I am going to reveal that right now. Here is the correlation between OER and the Case-Shiller Home Price Index. I am a nerd and I ran these numbers myself because I have no life and I wake up pretty early so my wife doesn't get too mad at me when I do these kinds of things. Okay, so this is all publicly available information that you can get from Fred. So I went back to about 1988 January for both time series of data for home price and for OER, the percentage change. And here we got the percentage annual change here for Case-Shiller Home Price Index. Now, if we do a correlation and do a monthly lag, we will see a correlation. Now, for myself, what I did was I wanted to get that correlation as tight as possible. So I said, what correlation of date ranges will give me the strongest correlation? So I played around with the numbers a little bit. So as far as biases are concerned, you can say, well, hey, you kind of did some data snooping there, which may be true. But there's consensus here that there is a lag between and a correlation between rent and home prices. But if I am correct, let's start with the whole data set. Now, the reason why I don't like correlations that span this long in human behavior is because so many different regimes can impact the strength of the relationship. So many different things have happened since 1988 that might have changed the relationship between OER and home prices that it's giving us a correlation of 0.61 as far as a 20-month lag. And an R squared of 0.37. R squared is essentially how much the dependent variable, which would be OER, how much that variation, its variance, is impacted by the independent variable. Oh, I'm sorry, that's not the independent variable, but the independent variable, which is the home price. So that's how you can think of R squared. It's kind of like a nice little test. And essentially, there's a 20-month lag of positive, moderate correlation going all the way back to 1988. But in my view, and again, here's another assumption that I'm making, so take that into consideration. I believe that since the bottom of the Great Recession, and you could say, okay, well, maybe around the time of QE, so on and so forth, that we hit somewhat of a new regime. And that was around March of 2009. So I actually decided, okay, let me go back to March 2009 and see what that correlation is. And wouldn't you know it, it is way stronger than the whole of the data set. So 2009 to present, basically, we have a 0.84 correlation, 20-month lag between home prices and OER. Now, what does this mean for inflation? Well, I wrote it down here. According to this, OER may be elevated until April 2023, given that home prices have cooled or have not risen aggressively in August of 2021. So 20 months, or let's do this. 24 months is 2 years. So that'll be August 2023. Subtract, that's the 8th month. Subtract 4 from that. You're in April. So April of 2023 might be where we will peak in OER, potentially, which kind of lines up with what a lot of analysts have been saying. A lot of analysts have been saying expect home prices to cool off and drop in 2022. And a lot of the Fed and a lot of people in the IMF have been saying they expect inflation to rise, but then begin to possibly moderate by the end of 2022. So that's roughly around the time that I'm seeing OER peak by April of 2023. Now imagine that other factors of inflation may be dropping by that time, or may have already dropped by April 2023. So to basically sum it all up, 2022 may be a big year for inflation and maybe potentially a strong year for precious metals. So if you see something like this and you feel somewhat discouraged by the price movement of gold or silver on a day-to-day basis, just know that in the future, we should expect to see, given the inflation expectations of 2022, stronger price action. So guys, I'm excited. I nerded out with this one, but let me know what you think about this in the comment section below.